Hello, this is Ernest Osias with Woodall Risk Management, Director of Market Analytics. Thank you for joining us for our grain market technical overview. We look forward to sharing with you some insights with regards to the market price action. But before we do that, a brief look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Once again, thank you for joining us for our grain market technical overview. We'll go ahead and begin with the corn contract. Stemming from last week, we'll notice here that corn made a reasonable low inside of the markets about mid-November or so. After that low, he continued to trend his way upwards, and then a couple of days ago gave us a little sell signal. At least we thought it was a sell signal, but it quickly reversed itself yesterday, and the market came right back and took out whatever drop that it had, giving us an outside reversal bar movement there. Today we see the market has continued to follow through with a little bit of upward movement. And what we're looking at right now is key resistance that lives somewhere in the neighborhood of 384.5 to 382.5. As the market looks to trace up in this area here, the first line of resistance actually lies at the 378.5 level, which would be right inside of here. In addition to that, you'll notice that the market has begun trending its way up from being oversold and is now approaching potentially being overbought. If we could see the market come in and become overbought in conjunction with a topping movement inside of this area here, both inside of the stochastic alongside of the upward movement that we see here, we believe that another decline should follow. But we have to continue to follow what the charts are indicating and what they're giving us at this time. So right now we're looking at good resistance potentially at 378.5, and beyond that area 382.5 to about 384.25 are two good areas to look for potential resistance. Especially with the previous low that was made in the markets back in October, previous lows often will become future resistance for the markets, and the fundamental data still continues to point towards lower price action for the actual corn contract or the corn complex itself. So right now we're not really bullish. We're looking at the recent advances perhaps attributed to profit taking in the market. So for now we'll continue to monitor the price action with what we're seeing right now. Jumping ahead to the December corn contract, you'll notice a similar price action is occurring here, where we notice that the market is moving from being oversold upwards to overbought, and in conjunction with that we can see this pullback movement inside of the markets. The bulk of this actual pullback movement had been a sideways movement, and we're just now finally starting to break out of this area. And it looks like it wants to retest the previous low from October of 399.5. So what we're looking at is about a resistance point close to about 400 for this actual move in the December corn contract. So once this contract becomes overbought, similar to the March contract, we're looking for resistance to occur there and a potential move down. Now granted, should the market find some strength above the 400 level, we would then be looking at a consolidation point resistance of about 405 to 410, which would land us in this region or in this zone right here. So it's going to be important to follow what happens with regards to the upcoming price action. Historically, though, what we do find is that the corn contract should trend sideways going into the end of the year, but particularly right now we're looking at a cycle for the corn contract that lends itself to bearish price action, which indicates to us that by Friday top should be in, and if a top occurs Friday, we would then be looking for the market to trend lower slowly through the end of the month and possibly through January as well. Moving on to the January soybean contract, you'll notice that its price action has been stronger than that of corn. So here in this movement that we're looking at, we can see this pullback actually taking form very well in a strong fashion in conjunction again with the market becoming overbought in the stochastic here. This overbought movement, though, you'll notice per today's close, the market closed at the top end of the trading range, so we would not be interested in taking any shorts as of yet until we could see some weakness in the price action of the chart itself. Currently we have resistance at 894.5, and beyond that we're looking for a movement that could probably take us to about 925 or so, which would be basically a retest of previous highs of this actual contract. As this contract continues to progress, we want to keep our eye on the 925 area. This becomes a spot that could very well become a lower double top. What we mean by a lower double top is the market made a high previously, followed by a double top formation. If the market makes it up into this area, this would be a keen area for downward movement. In fact, should the market make it up to this price threshold, we would suggest perhaps even hedging or covering some of your inventory at these levels, as that would be a very good price for covering. A different view of this same contract shows us how the soybean contract actually came in and made a low at our volatility-based support area. And then you'll notice here how we're tracing out in the market a circular movement with regards to our geometry of the markets. So the market came in and made a low right inside of our circle as we had been discussing previously, and has rallied from there. The first point of resistance, he came in and he has since gone through there. And if you recall from our last weekly market update, we talked about how the 895 or 894.5 area would be a potential target zone or target level. Because of the nature of the strength of yesterday's, or rather of today's move, we think that the market will probably get to this price threshold tomorrow without any issues. And the next two price thresholds that we want to look at for good resistance in the event it doesn't make it quite to the 925 area would either be about 900.5 or even 920 or 913 or so with regards to upcoming resistance levels for this particular contract. Part of why we think he might find resistance prior to that 925 area is because it is overbought, but being overbought in a strong trend simply means that it can continue to trend sideways in that overbought zone as it makes its way up to further or a higher resistance. Moving forward to the November soybean contract, we will notice actually some interesting things happening on this contract itself. First, you'll notice that our pivot 11 here has been confirmed with the recent advance that we saw over the past 2 days. The market moved enough upwards from that low to confirm that that low, or that swing rather, is in fact our swing 11, and we're moving up to swing 12 above the market somewhere. It has not terminated as of yet, but we're looking to see where it may terminate. Something of note that you want to see is we have an ABC pattern that is establishing itself, with this A leg coming in, a B leg on the way back down, and now we're in the midst of a potential C leg on the way back up. C legs will typically terminate at least about the same length as the first A leg advance. So what we're looking at here is the distance traveled here to reoccur, which would put us at about the 935 to 940 range with regards to this price action. The other thing of note is the nature of where the retracement from this current advance terminated. So the market made a move upwards, but for some of us who are familiar with Fibonacci retracements in the market, the retracement that occurred here ended up coming in at exactly 7.86% with regards to this low. So what that tells us is there is a bit of vibration operating in the market, telling us that this low could be of significance, especially if we're able to exceed the previous pivot high here that would land us somewhere in this neighborhood. If the market is actually able to get above 954, then we're looking at a potential uptrend in spite of all of the bearish information that we are fully aware of with regards to the soybean market. So we want to monitor some of these key levels as well as the price action. So with regards to this chart, what we understand is the technicals are telling us that we could be looking at higher prices, even with the fundamentals telling us that prices should have further price pressure. Right now we're going to lean a bit on the technicals to tell us where the price action is, and once the weakness sets in, then we'll look to make sure that we're either hedged or we're taking appropriate action with regards to what it's communicating. Unlike corn and soybean, the July wheat contract is actually moving in concert with its fundamental information. Just recently, the contract is very close to reaching the life of contract lows that occurred back in September 4th to be exact, is where the life of a contract low occurred. Today we are retesting that area, and tomorrow could very well breach it and break it. Our wave 3 that we initially had projected as potentially at the previous pivot in the market was never confirmed. So now we're looking at a new wave 3 low to come in, and we're looking at a price minimum, a price objective of about 445 to 450 for this actual decline in the July wheat contract. Information is telling us that there is plenty of supply. The US dollar has been very strong, and the chart is also very weak itself. So as we continue to monitor the July wheat contract, we do not foresee very much by way of support for current prices. First area of support that it could see is at about 470 or so, but once it breaches there, 450 should not be an issue for it on the way down. In fact, we could in fact see a movement that goes all the way down to about 440, which would be a full cycle down from the highs that it had seen previously back over the summer. In closing, we're going to take a look at the live cattle February contract. Here we're very excited as the price action is moving in concert with what we had been anticipating with regards to its movement itself. Several weeks back, we talked about how this 127.7 low is probably a very significant low. The market made an advance and found resistance right up against the 135 area, which we saw occur a couple days ago. And then today we saw another big advance that followed yesterday's decline that again tested that resistance level just shy of 135. The market now is making its way up from being overbought up into being oversold, or rather up from being down from being oversold up to being overbought. And we believe that the 131 or 131 area is going to be key support for this contract. As long as it's able to stay above this number or this level and make its way above 136 and a quarter or so, we believe that we should see a minimum price objective of about 138 and a quarter. And once it gets there, we could see a correction that comes back, and that correction could very well test our natural support level that the market has been respecting for quite some time. And once that happens, we could see another advance as long as it stays above 32 that breaks out to new highs. We'll continue to monitor this contract here, but in particular, we wanted to bring to your attention the importance of the 127.7 number, 138, or rather 130.8, as well as the 136 and a quarter upwards to 138 and a quarter as well. Those key levels are going to be very important as we make our movements up and down to see how close to our projections the market is in fact able to trace itself out. Thank you so much for joining us for our weekly market update. We look forward to being able to share with you market insights again. We will see you again next week.